Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, the U.S. Fed has brought back quantitative easing, except they're not calling it that this time. What's the story there?
Well, this goes back to what we talked about in the show a couple of weeks ago, where money center banks in the United States are having a hard time getting the reserves they need to meet their requirements. So the Fed has had to come in and help them out. And they help the banks out by expanding their balance sheet. Well, what is expanding your balance sheet? Well, it's essentially when they start doing it in the size that they're having to do now, and we're talking billions upon billions of dollars, it's kind of like quantitative easing. However, we don't want to call it quantitative easing, Jim, particularly as we're heading into an election, because that might be seen as the Fed trying to bail out Wall Street, and we wouldn't want to have that, would we?
Well, why wouldn't we want that? Is it too close to what happened under Obama?
Well, it's interesting. It's an election year, and you've got Elizabeth Warren, who is now leading, the last poll I saw, leading the primary candidates for the Democrat ticket, and she's quite focused on running against Wall Street, and any hint that Washington is doing Wall Street any favors will likely draw her attention and put the Fed under a spotlight they don't really want to be under. So they've got to kind of massage this, and they will, and they'll call it something else. And right now, it's only temporary until the next meeting. What they're doing, they're bringing back these repo operations, and I mean, basically, these are overnight and short-term lending that the Fed does to these banks who need liquidity. But we're going to get something new after next meeting that will be more permanent, and they won't call it QE, but that's basically what it is, and that has a lot of investors excited, thinking that we're back to the old boy playbook, the Bernanke, Obama, Yellen playbook, and all you have to do is buy stocks. They're going to keep going up, and trade deal will just be icing on the cake. So, that's one of the I would say sort of schools of thought in the market right now is that the S&P 500 is on the cusp of breaking out to the upside. All it needs is a trade deal, and off we go, because it's an election year, and you'll soon have all the candidates in a big war for everyone's vote. Kind of like what we saw in Canada, the leaders debate earlier this week. Everyone had lots of promises, but no one talked about how they were going to pay for it. Well, Canada's not the only country in the world that has politicians that do that. In the United States, they do it too. In fact, under Mr. Trump, the U.S. deficit has, I believe it hasn't doubled, but I'm not sure exactly the figure, but it's gone up quite a bit. Let's put it that way. They're $1 trillion. The U.S. budget deficit now is almost $1 trillion. Was last year. So politicians in election years like to spend money they don't have, but that gets stock market investors excited for better times ahead in terms of growth. So that the thinking is, why would this year be any different? And the S&P is posed to break out. However, there is another school of thought in the market that has a different take on things.
if there's this new injection of help, does that mean there won't be a major correction, or is that just a hope?
Well, this other school of thought in the market is that, yes, maybe we'll get a trade deal. Maybe we won't. But the trade deal has already done some damage. And all you have to do is look at some of the earnings releases that have come out. We've seen in Canada, Durrell Industries, which they make toys and sporting goods, and they have operations around the world. Well, they suspended their dividend, and they blame part of it on the tariffs. They call it tariff chaos, I believe. Now, I think there's other factors of that company as well. In terms of dealing with the changing demand, consumer demand trends. But I'm sure tariffs haven't helped them. And then we had today, and we mentioned this in our Insight newsletter, which is going out today, and we'll post on CanadianInsider.com. It's free. You can take a look at it. The title QE Euphoria is likely misplaced. There's a chemical company called Cranton in the United States that today fell 30% because it warned that its Q3 results are being impacted by not just tariffs, but also slowing global demand. So the other school of thought is that there's already some problems baked into the cake, and what we've seen in Wall Street with banks having to scramble for cash is one of those symptoms. Basically, that there's a lack of liquidity in the system, and generally that's not good for stock prices, and that will be the big headwind for this breakout scenario that the bulls are hanging their hats on. So we will have to see, in terms of what we look at as our core starting point for analysis. We kind of differentiate ourselves, Jim, from other shops out there, because you need different points of view, and we start looking at what insiders are doing both at the stock and at the market level. And at the market level in the U.S., we put this chart in the Insights newsletter for this week. Insider sentiment in the United States is pretty steady. It's not doing much right now, and that is interesting. Given that the market's coming off, you would expect it to tick up a bit. But the steadiness, I think, is a bit deceiving. I think below the surface, there's a lot going on. Well, the buying we're seeing is in these small cap value stocks that are under being sold, and some for the right reasons, and some maybe for the wrong reasons. And then you've got massive profit taking in the popular stocks that everyone's going to be buying if they believe a breakout's going to happen. The Amazons, the Apples, the Facebooks. This is where you're seeing all the insiders taking their money off the table. So we've got a very interesting competition, I think, between the bulls and the bears for the rest of this month and going into next month, and we'll see if we get a mini deal. We're talking mini trade deals now, not to be confused with mini-me. We're going to have a mini deal, and we'll see if that is able to spark the S&P 500 off to new highs, and Apple and Facebook can soar on everyone not wanting to miss out again, and we'll be back to the old Bernanke, Obama, yelling good times. So let's see if that plays out, but we wouldn't put a lot of money on it. We put a 50-50 that we're going to break out to new highs at best.
We'll have more with Ted Dixon right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, what's the stock market situation in Canada?
Well, the Canadian market has been doing well up until the last few weeks, but the last bit of September and early October hasn't been that great. In terms of the stocks that we follow, the Canadian Insider Index had a pretty good run in September, but now it's run into some resistance, and I think it deals with those issues that we talked about before the break in terms of liquidity slowing global demand. So what I see in our index in terms of how it's behaving, I don't find that particularly bullish. I don't think it has anything to do with the election. There are some stocks, though, however, that are very election specific, and it's not, I don't think they're the stocks that maybe first pop into mind, such as the oil patch. Yes, I think if you had a conservative majority, you might get a little bit of an uptick in the oil patch, but you know what, even a conservative majority, I don't think they're going to be able to wave a magic wand and deal with all the pipeline issues, because you'll still have the army of hostility fighting, an Andrew Scheer government. If you were to be fortunate enough to form one, he would still have those non-government agencies and foreign-funded and special interest groups. They can put up, and they have put up a very tenacious fight, and they're probably more effective than the opposition. So even if the conservatives win, that in itself is not going to solve the oil patch's problems. What we need is some global growth to really gain some momentum. And unfortunately, that doesn't seem to be taking place right now. However, there are some stock-specific issues that I think do depend on the outcome of the election. I think in the telecom area, we talked about that, I believe, a little bit already, and I see DCE is still kind of flirting with 52-week highs, but I'd be very careful up here chasing that. Yes, it's got a nice dividend yield, but if you get a liberal minority government with an NDP balance of power, and the NDP leader had a very good debate night, and it looks like he stemmed the bleeding for that party, and is the only leader that has any momentum right now. So, we could have a liberal minority with the NDP holding them in power. That would be the worst outcome, I think, for telecom stocks. And there's a few other stocks that, you might want to start thinking even about the big banks under that situation. They're going to be looking for ways to, if they are in a minority, to show that they're sticking up for the little person, the little guy, little gal, and take on big business. And there's nothing bigger in Canada than banks and telecoms. So I'd be very careful with those stocks. I know there's a huge consensus amongst investors that you can't go wrong with these big Canadian companies, and that's been fairly true, over the last generation. But we're really into new times here since the great financial crisis, and now we're kind of entering a new phase post financial crisis where you've had all this massive central bank liquidity come in and prop up assets and prop up big company stock prices, like the FANGs in the U.S. and big banks in Canada. But I think we're heading for a sea change, and it's going to be politically driven. And if you have a minority government in Canada with the Liberals running the show, with the NDP holding balance of power, I would think twice about, loading up on all these big Canadian companies that are, just have a bullseye target on their backs for socialist-leaning administration. So I think that's where the big risk is. I think the oil patch, I think those stocks have been clobbered. They've been hammered. Everyone hates them. They're trading at multiples of like 3, PEs of 3 and 4, and so I think the doom trade in there is long played out. But in some of these bigger companies, these icons that investors feel are untouchable in terms of risk, I think that's probably going to be misplaced. Now, if we get a liberal majority or a conservative majority, then I think people can breathe a sigh of relief, and maybe we'll get another 4 years of back to business as usual. But minority government, not that way. No, I don't think so.
We'll have more with Ted Dixon right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, gold had a down day today. What's your outlook for gold?
Well, we don't forecast gold. I mean, we look at the mining stocks as part of our overall broad market assessment, and still looking pretty good in that area. You've got to pick your spots and pick the right managements. And I think for those investors who have a timeline of more than 6 weeks, you do your homework and you just sit back and you use these little pullbacks to buy. I don't see anything's changed in the past month or two that would call into question the reasons why gold broke out earlier this year. Nothing has changed. There's been no reforms of the monetary system. There's been no reforms of government. I don't. This trade deal, this mini deal that we're probably going to get, if gold sells off on that would, on the miners sell off on that's probably a great buying opportunity if that happens. Short of a massive surprise with a comprehensive trade deal, that's just not going to happen. These are just sort of short-term maneuvers. At the end of the day, we're on a path to remaking the monetary system. The only question is, Jim, does it take 10 weeks, 10 months, or 10 years? And I don't have the answer to that, but between now and when we do have that, gold is going to do very well, and it's going to have pullbacks along the way, and that's when you have to buy. Now, what's very interesting is that Bitcoin is struggled here, and there's two schools of thought there, and I think this is really an important issue as well, because Bitcoin kind of competes with gold as an alternative to the current monetary system. So why is Bitcoin struggling here? I think one of the reasons is this lack of liquidity. I think this supports the overall bearish case for stocks and does not support the breakout case. If there was enough liquidity to really zoom stocks, I think you would see Bitcoin a lot healthier than it is. You'd see a lot more speculative money in it. And I know there's a group with a very compelling argument why Bitcoin fundamentally isn't worth what it is. And then, of course, you have the other side. But if the fundamentals were playing out here, you would see it a lot lower already. But I think that there is a fundamental. My personal view is there is a fundamental rationale behind cryptocurrencies. However, to keep them going up at a clip, you need liquidity as well, like lots of liquidity in the market, and we're seeing some of that liquidity drain. Gold could be susceptible to similar drawdowns. However, because of the size of the gold market, I think you'll have enough players coming in understanding that we're going to have a monetary reset at some point. So gold will be the first beneficiary of those big institutional flows, and Bitcoin still has a ways to go to attract and be able to accommodate those institutional flows. So I think Bitcoin's going to be a lot choppier than gold, but gold's going to be choppy as well. But don't sweat these down moves. I mean, really, at the end of the day, the monetary system's going to need to be fixed, and until that happens, the case for getting out of gold is going to be a very very weak one. It's going to be much better to, I think, buy on the dips, buy on the bullion dips, than buy on the S&P 500 dips. That would be my take on things.
The Financial Post did a story saying people who invested in the marijuana industry in Canada saw a 57% loss over the past year. Is that going to turn around anytime soon?
We get that question a lot, and we're following that in our reports. Not every day, but when we see some insider activity or when we have a chance to write about it in terms of things that develop in the market with respect to insiders. We don't jump to these headlines about a company doing a deal in the U.S. or coming up with a new thing or this thing. I mean, at this point, that's not going to move. That's not going to move things. What you'll eventually see over time is a couple of leaders emerge thanks to sound management well, a little bit of luck, being in the right place at the right time, you're going to see some of these stocks move up. A lot of them are going to go nowhere, are going to get eaten up by their competitors, stronger competitors. We're seeing some selective insider buying. I think you really want to zero in on the companies you're seeing the buying in, but it's still broadly too early to jump in and chase these, or expect that it's going to turn around soon. It's fine if you're a value investor and you've really got your head around the space and you've got a framework to look at what companies you like, and you've got that in the context of where the regulatory environment is. Yeah, now's a good time to start putting together a list and maybe doing some nibbling. But we've only written about one marijuana company that come across positively on our screens, I think, in the past month. And it's a very small company, so I'm not going to mention it. But the big ones, no, and they're just not there yet. We've seen some medium-sized insider buying in some medium-sized company with some U.S. exposure. That's interesting. They're not quite in our mostly sunny or sunny outlook categories. That would mean in the top 30 or top 10% of our rankings, but they're getting close. So, I think some opportunities are emerging, but they're very right. It's a rifle shot approach. It's not a shotgun approach. So, it's a great time if you're a value contrarian cannabis investor. Cannabis contrarians, Jim, let's call it that. It's time for the cannabis contrarians to have their day, but that means you've got to have a time horizon of 1 to 5 years, not 1 to 5 months.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.